Hey everyone, welcome back to Corporate Decoder. Today TCW Funds Incorporated just filed their N-CSR for April 2026, and I am seeing some interesting details in their financial tables that tell a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a detailed look into how these different investment funds are performing and what they are invested in. We will break down some key numbers and look at what they mean for these funds and their investors. This is a certified shareholder report, basically a big update for investors on how their money is doing. TCW Funds Incorporated is a registered management investment company, which means they are pretty much mutual funds, and this is their official report. First up, let's look at the TCW Central Cash Fund. This fund is all about keeping money safe and available, aiming for a stable share price of $1. It is a government money market fund, meaning it invests in super safe, very short-term government debt. For the 6 months ending the 30th of April 2026, this fund had over $4.4 billion in total net assets. That is a massive amount of money, showing how big this fund is and how many people trust it with their cash. What did it invest in? The biggest chunk, 40.3%, was in repurchase agreements. Think of these as very short-term loans collateralized by US Treasury Securities. Then, US government agency obligations made up 37.6% and US Treasury Securities were 33.6%. These are all very safe, government-backed or related investments. The fact that liabilities were negative 11.6% likely means they had more assets than liabilities, which is a good sign for stability. Their top 10 holdings are all very similar types of investments. For example, they held a significant amount in a Bank of America repurchase agreement at 3.64% that was due in May 2026, which was 11.2% of their net assets. This stability is typical for a cash fund. Now, let's switch gears to the TCW Concentrated Large Cap Growth Fund. This fund is aiming for long-term growth by investing in companies that are already big, in the range of the Russell 1000 Growth Index. They invest at least 80% of their assets in these big companies. This fund had around $683 million in net assets. While smaller than the cash fund, it is still a significant amount of money. The portfolio turnover rate was 9%, which means they were not buying and selling stocks very frequently, suggesting a buy and hold strategy, which is often good for long-term growth. Where did they put their money? A whopping 48.4% was in information technology. The next biggest were communication services at 15.3% and consumer discretionary at 8.6%. This concentration in tech is a key strategy, betting on growth from those types of companies. The top holding here is Nvidia Corp, making up a huge 16.5% of the net assets. Given Nvidia's recent performance, this is a bold bet on artificial intelligence and computing growth. Other top holdings include Alphabet Inc., Broadcom Inc., and Microsoft Corp., all tech giants. This tells us the fund is heavily leaning into the tech sector for its growth potential. Moving on to the TCW Conservative Allocation Fund. As the name suggests, this fund aims for a balance seeking current income and then capital growth. It does this by investing in a mix of other funds, fixed income funds, equity funds with different investing styles like growth and value, and even alternative funds that might invest in things like commodities or currencies. This fund was smaller with about $35 million in net assets. The portfolio turnover was 14%, again indicating a more stable, less active trading approach. Looking at its investments, a massive 64.8% was in diversified fixed income funds. This means it is largely investing in other bond funds for its income generation. Then about 20.7% was in diversified equity funds and 13.7% in exchange, traded funds or ETFs, which are popular and often diverse investments. Now let's dive into the TCW Securitized Bond Fund. This fund aims for maximum current income and above, average total return through investments in securitized vehicles and similar instruments. This is a much larger fund with over $1.6 billion in net assets. The portfolio turnover rate was 136%, which is quite high. This indicates active management, with a lot of buying and selling to adapt to market changes. Their asset allocation shows a huge chunk, 68.7%, in residential mortgage-backed securities from agencies. That means they are heavily invested in securities backed by mortgages, likely from government-sponsored entities like Fannie Mae or Freddie Mac. Another 22.3% was in residential mortgage-backed securities from non-agencies, and 14.2% in commercial mortgage-backed securities. This reveals a strong focus on mortgage and asset-backed securities as their core strategy. Their top holding was US Treasury notes, a safe bet, making up 10.6% of the net assets. Other top holdings were also US Treasury notes and bonds with varying interest rates and maturity dates, indicating a strategy of holding a diversified portfolio of US government debt to generate income. The filing also includes a lot of financial statements and notes that give a deeper dive into the company's operations. But for a quick overview from a corporate decoder perspective, the financials and portfolio breakdown are the most telling parts for investors. Overall, TCW Funds Inc. is a large player managing multiple funds with diverse strategies from very safe cash funds to more aggressive emerging market equity funds. Each fund has its own distinct approach to investing and managing risk, which is clearly laid out in this report. The concentration in tech for growth funds highlights a current market trend, while the conservative allocation and bond funds show a focus on stability and income. The securitized bond fund's high turnover rate suggests active management and a strategy to capitalize on market movements in the mortgage-backed securities sector. Alright, that is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.